Okay, I guess we're recording now. So, just as a context for whoever sees this on YouTube after this is being recorded, or for example, Vince, who isn't here right now, he'll probably see this later. We already did kind of video of analyzing how to analyze a chart from scratch, but something went wrong with the encoding. The video looks like a PowerPoint presentation at best. So in the previous video we also only did Bitcoin, so I thought we could do it again. Also because we had a drop recently, so might as well analyze it because it'll be good for the week ahead, right? And we can share this with the free section of the community as well. And then we'll also do gold, because on Bitcoin, for example, we have exocharts for free and ATAs and stuff like that, but we don't have that for gold. We can have it, but I don't. It's kind of expensive and I don't. So I made a little list just to not forget anything, and this is let me just increase my letters here. I just took notes on a notepad. It's good enough just for me to not forget. But I can also actually, you know what? Let me just come here. Text. This is what we're going to be going through today. It'll basically create a checklist for us to basically go through on each new chart, and basically the closer we get to the end, the closer we get to targeting a possible point of interest for an actual entry, because after you do 15-minute market structure and supply and demand, you're basically just waiting for a specific level to be touched, right? So that basically already tells you when, if, and how to enter. So let's start with this: the weekly, monthly, and daily levels. I know that some of the things that I'm gonna say are a little bit of a repeat for some of you guys, especially Elena, for example, because she's doing the mentorship with me. So, you know, Elena, bear with me. At least this is kind of like a session review for you, which is also not bad, right? So how do I define levels? First of all, the monthly, weekly, and daily levels. Basically, I look for synchronized open and close candles, like this one here, and I very simply just place a horizontal ray on it. I have a template for each of those, and basically every time that we see an open and close synchronized and left untouched for at least one candle, at least, better if it's more, but at least one candle, then we mark it out. So we have this case, we have this case up here, we also have these guys, we have these guys, although they're, you know, they're not very relevant. We have these, also not exactly very relevant. These barely tested, didn't though. And one thing that I avoid doing is, if I already have, for example, in this case, this is also a candidate, right? The open and close are synchronized and they weren't tested after that. But we already have a level there, so I avoid creating another one on top of that. Okay. Very important. After this, oh sorry, but this is not a pivot. Sorry, I was going to mark these guys out, but they are not a pivot. So very important is, as you go through these, each one of them you put inside a folder, because when we go through the whole checklist, this is gonna be a lot of lines and a lot of boxes and a lot of everything. So if you have all on the chart, it's gonna be too messy, okay? So we want to be able to show and hide as we please, just to define a bias based on that, okay? So that's the monthly. Now we do the same thing on the weekly, okay? And you'll start to notice that, especially on the weekly, for example, I'll have these guys on. You will start to notice that the places where we have these kind of things, you're gonna have crazy retests. They will almost seem too good to be true. Stuff like, for example, this guy was valid for some time, and then I would actually probably mark it out like this, and the way we have this already tested kind of makes this guy a little bit irrelevant, because of how many tests there was to that level. Like, for example, that little tap, that's magic, right? So we have that. We have these guys over here. Look at that tap over there. Amazing. We have also these guys. We have these guys. These. And you wanna always, if possible, you wanna start from the back first, and only then start looking at more recent ones, okay? Because the older the level, the more confluence is gonna have in the future, and you'll see why. I think, like, from this 2021-2022 section, I think that's all of it. There's one over here, but it was already tested with those wicks. I feel like it's a waste of time, yeah, to include this guy. Waste of time, I mean waste of line. This one kind of irrelevant as well. Let my dog out. Get up. Say. She's angry today.
Okay.
Yeah.
I'm sorry. Did you post the YouTube link or not?
Ah, sorry, I forgot.
cannot find
Give me a second.
because I logged in into the old one and it's not here. So I'm here.
I'm sorry. I just posted on the chat.
And you're recording this, right? Sorry, Toby.
I am not, but because I'm streaming, YouTube will record it for me. Okay. So that link will be valid for forever until YouTube ceases to exist, I guess. Okay, or my account ceases to exist. Anyway.
Sorry for interruption.
No problem. My dog interrupted first. So I'm also gonna mark this one because it was kind of amazing on those highs and lows. And also this one, because it's right on top of a monthly level, gives it more power. And I guess it's kind of pointless to mark out this one and this one, because it's basically gonna come to the same area, the same level of interest that we have there. And I guess that's it. More recent ones. I would say that we have this guy, and from a point of resistance he is valid, but I guess we will see daily levels there. Okay. And I would also mark out this guy, but we already have a monthly there. So I think that any line that I put on top of this is just noise. And keep in mind, these levels are interesting not only because you see a lot of taps into it with strong reactions. Probably the best example was this range down here and this range down here, up here. And also this 56 test was kind of amazing. We are basically going to have a very similar situation now with the daily. But on the daily, of course, you don't want to go back and seeing 2021 levels. You're basically going to reach the same conclusion as to what you're already seeing here. One thing that you want to avoid is if you already, kind of like what we just did regarding the monthly levels, if you already have a monthly level there and a weekly that basically lines up with it, the weekly is just a byproduct of the monthly existing, the monthly level existing. So it's kind of pointless to create another line, no? But so daily levels we have, I think one of the more relevant is this one. Clear, very clear resistance, very easy to spot. This is probably going to be another one soon enough. I don't know if this is relevant. Kind of is on the top range here. We have this one as well. Was pretty nice. This one was pretty nice. But again, as you can see, in my opinion, it's kind of a waste to have this one here. Especially this tap. This tap was pretty incredible in topping the weekly level. So it's just a waste, right? This one, we can maybe mark out this one. But I'll also mark out this one. This one seems to be even better in terms of resistance. But again, monthly level there. So waste, right? It's just noise. This one, for example, I marked it out just for you guys to notice something. The monthly level is actually a much better representation of a support. You barely have any candle close except this, or this range, this weird accumulation here. And it's not exactly on the daily, right? It's on the monthly. It's basically between the monthly and that weekly level. So again, this daily becomes kind of like a waste of time, a waste of space actually. This one, for example, would be a little bit more relevant, and it might actually be nice because we're gonna have a 50% retest here. But we'll talk about fair value gap soon enough. So I'm maybe gonna leave that one. And even though this guy over here, this one, even though this guy got tested right after, I'm gonna leave it here. The reason is obvious, right? Tap here, we broke it, used it as support, push through, used the daily again, came back, used it as support, retraced, used it as support again, retraced, resistance. Can you see how we're bouncing from daily levels to daily levels? This is pretty cool. Okay, so I think that right now this is as good as done. The last time that we did this stream, this candle over here didn't exist, and I was basically telling you guys you can watch the stream, even though it's like a PowerPoint presentation. It's a very good example of these levels being effective, because all I did was saying that, excuse me, sorry, we were at clear resistance. When we created this, we cleared liquidity from here, but weren't able to make a higher high. After coming here, we tested the daily level again, just took liquidity. As bullish as this could potentially be, makes no sense to look for longs here, right? just makes no sense. And sure enough, the day after, yes, we pumped a little bit more. I think we actually even took, let me check. This high was 72115.1. Oh, right, I remember. We'll talk about this in a second. I'm just gonna leave a line there with no text. So we came to a daily level. We were already like losing momentum. Makes no sense to look for longs, and we probably just did a PO3 here, manipulate to the top side, buy side liquidity to then flush the longs in a downtrend. And we have another daily level here, right? So a possibility obviously is that if we're close to the daily level, we'll look for longs. If this is a continuation, we're gonna have a retrace and either break the daily level or use this consolidation as a support. Okay. So in terms of dailies, it always basically comes down to the same thing. Check out candles that have the open and close synchronized, like this, this is technically a railroad track. You can check candlestick patterns later. But every one of these, mark them out with a daily, with a horizontal ray. It's probably best to do as I did here with different templates, just to understand. Obviously, a monthly is going to have more importance than a weekly, and a weekly more importance than a daily, so on and so forth, right? So, any questions so far? Can I just continue, move on? Do you guys want to interrupt for any reason?
Been pretty clear so far.
All good, all good.
Okay. If at any point in time you guys want to do a bathroom break, or somebody's calling you, or you have a question, no problem, just interrupt. Like, you know, this, I'm streaming for YouTube, but it's just for you guys to have it as a video on demand if you need in the future. But this is just a talk between us guys, and it's not gonna be all that public, so whatever. So these are levels. Now basically we're gonna do, let's go back to the weekly. We're gonna do, let me put a check mark here. We are going to check every place that has a lot of wicks, basically. What do I mean by that? No, 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 no. No, my little friend, go away. Or are you gonna bark? No? Okay, come in. Huh? Huh? Come on. Come on. Come on. She was like, can I? Can I? Can I? I think she doesn't like the cat. I think they
It's jealous, she's jealous.
could be. Okay. So basically what we're now going to do is, using the levels that we marked out. For example, I'm on the weekly. Sorry, I should have started on the monthly, but whatever, I'll go back after this just to explain this part. Choosing the levels that we defined. For example, we have this one. We're gonna see if we have a zone with a lot of wicks. If we do, we're going to create a box that is the exact size of that wick, and we basically going to line it up to left and right. And what we can do is, if for example we have another open close synchronized here, which we don't, right? We have a range. But if we were to have one, we would create, we would do a little update to the size of those wicks again. But we don't have that case. When we do, because we will have an example like that, I'll show you how to do it. But for example, as you can see, since January 2021, initially this was like this, right? Because again, it's the size of that. We have an open and close here, untested for at least a day, tested only on a day after, and so the support and resistance zone is like this. When price breaks above it, we have another synchronized open and close, right? So you come here and you update it to that. Okay, and you basically keep updating it so that it synchronizes with the closes. So we could synchronize it like that now. And as we go on further, for example, now we would do it like this. And we go further, and now we would update it like this. Just so that, for example, this is easier to see if I hide the wicks. Right? We keep updating it so that it's in between synchronized open and closes. Okay? And so we don't have any synchronized open and closes that are untested until this moment over here. But this one is only the wick that goes above, right? We would synchronize it if we would put the box. Where's the top handle? There, here it is. We would synchronize it like this if instead of a bearish candle we got a bullish candle out of here. Okay, but we don't, so we keep it there. Basically, we're gonna keep doing this until another similar update. And for example, over here, we have these open and closes, right? With just a lot of wicks after that. So this one, for example, is one support resistance zone. And this is gonna make a lot of sense soon. June. What day is it today? I don't even know. 9th of June. Let's put it until July of sorts. Maybe August. Okay. Until August. So where do we have more situations like this? We have what started as this. Let's update it up to there and keep it like this, for example. And the size is going to be the top of the wick, right? So all of this price action gets inside of it, so we're not going to update it, okay? But when we get up to here, we can update it to those guys over there, right? It's really nice to see this far back because you see a lot of reactions, and that just gives you a little bit more confidence on taking a trade here. Okay, so we got that out of the way. We talked about this, and I'm gonna mark it as well. That one that let's use all of this, just because it seems very, 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 very nice. So this guy is a little bit of an exception, so I'm just doing it based on intuition, okay? More. We have this one. Doesn't seem to be the most relevant one, but let's mark it. And we have this one here as well. Notice how this becomes very nice here as a confluence, right? And we already have that guy over there. Oh, we might as well mark this guy, even though I think right now it's a little bit irrelevant. Update it to here. Update it to there. And finally, we have these guys, which we can update like this. I updated to these guys because they're the last, right? And considering that this is already talking about 25k, I don't think it's relevant to do more than that, right? So looking at this, it looks pretty good, right? You can check on the chart how many times these areas get respected. I know that we're looking at the weekly, but imagine that this was a 1 minute chart, right? You could probably predict pretty well at least 2 trades here, right? I'm saying at least 2 trades in the sense that if this is to go up, one of the retraces could be either this one or that one. If this fails, it would either be either this one or that one, right? If it was the 1 minute. In price is fractal, so you can kind of see it the same way. So again, do not forget, mark these guys out as support resistance zones. So again, this is just using the wicks, right? Let me just hide this guy, not forget about him. Okay, that was doing the weekly, and just let me see. We'll probably not have anything relevant that is not already marked out. Yeah, I think we don't have to really do anything crazy here. The support resistance zone is kind of perfect here. Also kind of perfect. Yeah, we don't have to do anything here. Let's just do it on the daily for a little bit of more of a micro perspective. I'm thinking if I mark these guys, seems like a nice pivot point, even though it was tested right with this candle. But it seems like a really nice pivot to be respected as a point of interest. This is a little bit more immediate, so I'm not gonna leave it for August. This starts at 10. I'm gonna leave it for the end of the week. Other than that, this one is already marked. I'm not gonna mark it again. Probably this one. Again, this is not tested. This is tested already, I know. But just look at it, right? Seems interesting. Even if it's just for, even if it ends up just for being something like this, okay? Line that up there, line that up here, line that up with these open and closes, or maybe not. Maybe I should probably leave the original pivot point because it has so many nice taps. And I guess that's it. Yeah, I'd probably not include anything more. I think it's just gonna be noise. Let me just change the templates here. Move these guys to support resistance zones. Okay. So, check, right? Now, supply and demand. In supply and demand, I basically include ranges, which include order blocks, of course, and fair value gaps. That's kind of it. Because we have already confluence for the other things in terms of previous structure points, the levels, support resistance out of wicks, so I mostly focus on fair value gaps and blocks. For example, we only have one monthly fair value gap to be tested, and this would be pretty bearish, right? Oh man, music. Sorry. Shut up, shut up, shut up. If this continues, I think I might get a copyright strike. Let me change the settings to repeat playlist because this one is not copyrighted. Okay. This one not mitigated. This one already mitigated. So we don't really want price to go below 56k. If it does, it could eventually be kind of dangerous. So I'm gonna also mark, oh, by the way, mark them out. Otherwise you're gonna feel a little bit lost later, sorry. Monthly already mitigated. This would be a monthly order block. Oops, wrong template. In this case, I could either mark it out here as, or like this. Probably like this, makes more sense, just to, because this is just a zone, right? I don't have to be too precise with it. So yeah, not much going on the monthly right now. Right now, I mean. For example, if we want to talk about Doomsday, this is already mitigated. If price comes back to the 30k-ish fair value gap and loses that, oh god. This could probably not hold price. And then we don't have anything here on the monthly, so this is basically it. So S and D monthly. Generally, I just do one folder for S and D, supply and demand. But in this case, just to try and make it a little bit more clear, I'm gonna separate them for you guys. So let's change to the weekly. Now on the weekly, we have the same logic. I'm gonna hide these guys now. We have the same logic in regards to the fair value gap of the weekly. Okay. We have a tiny gap here. I think it's even kind of stupid to mark it out, but you know, let's try to be mechanical, right? Okay. And in my opinion, we got this.
The last one wasn't mitigated though, right? It's a fair value gap that was not mitigated, right?
This one?
Oh, the tiny one, yeah.
Yeah, no, it's not mitigated. In my opinion, it's kind of like a last chance for me to keep this range going. And I mean, we also have this one over here, but I don't think it's as relevant as this one. We could mark it out just to serve as an example. And again, trying to be mechanical, like if I was an indicator, I would mark it out as well, right? So we currently only have that, and we have, I'm gonna mark out these because the highs and the lows are basically the same. Let's mark this as a monthly order block. sorry, a weekly order block. For example, technically speaking, this is valid as an order block because that structural high is also inside a fair value gap, and it's a structure point. So this could be where price just stops moving just because of it bringing a previous structure point. But if we want to go into like the bulk of the price action, this order block will probably be the general support zone if price comes back here. So oh, by the way, we didn't do one thing. Let me just go back, just because I think it has a very interesting potential, which is, we didn't mark this out, but this is an yearly level. And you're gonna see why I think this might be interesting. Because the yearly level has the middle of the fair value gap, one monthly level, and a support resistance zone just above it. So it's kind of a big deal. The yearly level is kind of a big deal. 46,220. Okay. So let's go back to where I was. We were doing the weekly. Okay, so anyway, this is order block, point of interest. Keep in mind that we are right now above the last weekly level that we had. And we do have a fair value gap there, and right below we have this candle, which is technically an order block. But if we break 65,542, that weekly level, if we break it with a daily candle, if we close below that, it's yeah, it's pretty bearish. It's pretty bearish. I wouldn't be surprised actually if a month or two later we find ourselves either at 52k or 43k. So let's see what happens. Anyway, on the weekly, again, there's nothing much because we on the weekly we can just see that we rejected most of the 2 wicks, not exactly an order block or anything like that. And this was a reaction from a fair value gap / weekly level paired together. So I'm not gonna bother marking out this, but this is an overall range. That's the thing. If you want to, you can just mark out these little guys. But in reality, it's what you should consider is from the previous structure point to the low of that. Okay, and that becomes a very big box and becomes a potentially very big support. But I mean, going back there, could happen. Anything can always happen, but would be super bearish. Okay, so again, group these guys together, and now let's do the same thing on the daily. The daily has this as an overall order block. And we have an untested fair value gap. Fair value gap here. Okay. This is on the daily. We don't have anything left to test except what was already tested 2 days ago. Okay, that little guy. Because right now we are with an inside close of this. And to the downside, we have that fair value gap. We have this terribly awkward, bad phaser. Okay. And if we go lower, I would mark this as so, and hear me out. I wouldn't mark just this last candle, because this last candle is not integrated into a fair value gap. I like to include protected lows for a bullish move, protected lows, and the highs that are inside gaps. So it would be kind of like this. Okay. Why this low and not that one? Because from this high created that low. This high over here did not create that low, it created this one. So I respect this one the most. So that's a daily order block too. I'm not gonna bother marking out down below. Now, it's important to remember we did react to this order block, price held through it. We can almost mark it as a support and resistance already. And it could be if I do this, for example, if I base it out on those, and if I play with my little pawns every day, get another tap there and another tap there. Yeah, you get what you mean. So let's leave it as that. This is support resistance on the daily. Let's move that to the SR zones. And for example, to me, this is it. This is on the daily, this is it. I wouldn't really want much more information than this. The reason being, well, two things. First, we are in a massive range between 73k and 57.5k, right? A lot can happen during those, inside that range. So we just basically want to have the extremes marked out. We don't really want to be taking a constant look at what's inside external liquidity. We don't want to care too much about internal liquidity. It's harder to trade. It's a lot more choppy. It's a lot harder to determine to which liquidity is going to go. So if we focus on bigger ones, we not only have better risk to rewards, but it also kind of filters out the possible noise. So on the daily, I don't think I would mark out anything else, because this one is already proving to be somewhat tough. And I think that maybe on the 4 hour we're gonna have something more interesting. So let me just check. So S&D daily. And now let's do the 4 hour. 4 hour gets a little bit more interesting, right? We have this. I'm gonna leave it until June 9 AM. It's important for us to know where the 50% of this fair value gap is, and I'm gonna mark this out temporarily. I'm not gonna say anything about it, write anything about it. I was just about to, but I'm not gonna do it. And we also have this 4-hour order block. To the top side, I don't really care too much about anything else. It's important to take note of what happened, what has already happened. It had this order block. It failed, couldn't hold price. It broke the low below that order block. Okay. And this gives you a certain indication, but let's not talk about it right now. Okay, and then we have this fair value gap, which in turn includes this order block, but I think it's kind of a waste to mark it out. Just for the sake of the video, I'm gonna mark it out for newer people to understand. Why is that a block? Because it's still integrated inside of a fair value gap. Price comes here, it's a contrarian candle to the trend, and the high of that candle is inside the fair value gap. So we'll leave it at that. We do have a very small gap there. I'm gonna mark it out just because this is the weekend. Could be of importance, okay? And I think that's it for now. Let me just separate these trend lines. Okay, on this range, this upper range, I think this is it. Let's go further back and take a look at this, because here we have an untest. Oh, wait, never mind, it's already mitigated. So if it's already mitigated, you know what that means. I wouldn't bet long on it. Okay. Yeah, I don't really see anything else except wicks. Oh, I like that guy too. This is what we call an alpha block, because that low took out some considerable lows before making it smooth. That was nice. I feel like sometimes I'm zooming out, zoning out, sorry. Super tired, but this will not take long either. For this range on the 4-hour, I don't think anything else is relevant in terms of supply and demand. Why? Because, for example, I can mark this out, but this is all just gonna be liquidity, man. It'll probably work out for a scalp, but probably not much more than that. Again, I'll leave it marked just to serve as an example for the video. But everything else, like this order block is not even valid in terms of fair value gaps. It only gets created after. So it basically came back for a possible daily rejection block actually. So we have that. After this, let's talk about this in a sec as well. Let me separate them, and I think that's it. There's no other point of interest on this range from a perspective of fair value gaps and order blocks, I think. Oh, I marked this out as a fair value gap, dumbass, and no one says anything. You guys are not paying attention. Okay, I guess that's it, because if we break this, we're gonna have to analyze the chart again. Obviously, this is a consolidation. This is an order block, and I mean going below that is really bad, really bad. Okay. So let's hide this. Okay, and that basically sets us up. Let me just hide these guys. That basically sets us up to define a possible target. We now have both a fair value gap on the 4 hour with an untested daily fair value gap, and a daily order block and a 4 hour order block. This zone is going to be interesting. Even if it's just for a scalp, it's going to be interesting. Okay, it's a point of interest for a long. That breaking, there's this possibility, but if it does break to that point, it's already super bearish, right? Probably not a good idea for looking for longs. Yep, I don't really see anything. Okay, supply and demand, I don't really see anything. Notice we have a fair value gap of the weekly, which was already tested over there. Not too important there. That's it. So now, next item on the list, liquidity. And this is what I was doing lines about that I didn't want to talk about, just to try and not mix subjects. Let me save this, by the way. So typically it's kind of irrelevant to look at the liquidity points on the monthly. I don't think. No, I wouldn't mark anything on the weekly in terms of liquidity, mind you. This is actually a nice low. This is not a bad low. Although it would be better if this low was over here and it had a fair value gap, but it is what it is. Okay, so let's go to the daily. Okay, and let's talk about the things that we saw earlier. Oh, did I had my... Where did I put those guys? I didn't draw them? Okay. I guess I didn't draw them. So, on the daily, we just made equal highs, right? Price is super attracted to easy liquidity like this when we have too many highs stacked together. There's an extremely high chance that this that price is going to go for them. All we need to do is find out when. We also have, oops, sorry, wrong template. We also have equal lows down here, and on the daily, yeah, on the daily in terms of liquidity, I think that's done. It's important to note, like, for example, when you have stacked highs like this is easily a target, okay? And it was eventually. I'll mark it out like so. Okay. And for example, it's also important to understand that the same way these guys are, it's the same way these guys are. Liquidity easy to grab once again. Gonna move it a little bit like that. So logic would say either one that we take first is potentially the signal to go on a trade in the opposite direction. Meaning, if we take these highs first and have a reversal moment, or have a struggle, for example, going above this guy, this could very potentially signify that we're going at least for those equal lows, potentially for that liquidity grab, potentially retest this area because this fair value gap is already mitigated, and then we will have this, and before this we will have that. So, everything becomes more and more important when you start analyzing them like that. But this is already a nice start to have a bias in the future. Okay. So where is that guy? Okay, that is actually structure. Equal lows, equal highs. Okay. So I'm gonna mark this as liquidity. And we're gonna add to it by going to the 4-hour. So let me just extend this a little bit more. This was a liquidity grab, which has the potential, only a potential, to help price push even further, maybe above that high. But again, it's kind of just a potential. These lows are not that bad, but these ones are. So keep in mind that we're kind of in a if this then that scenario. Okay. Now this. Oh, I'm not gonna talk about this guy yet. This was a liquidity grab, yeah. Also, of course, important to notice. No. Yeah, whatever, could be. Okay. Notice that even though those are kind of bad lows, these guys, or this guy actually, this guy was not tested. And let me see what else. By the way, let me just put this on the 4-hour S&D. Okay. I think that is it. By the way, we can just mention that we have had a strong reaction because we came for these highs, took out shorts over there. Okay, I think that's it. And let's go, for example, to the 15-minute. We don't really have equal lows here. This was actually a liquidity grab followed by a small fair value gap. Then we took those lows again. These guys with quite a nice success. This was when? Oh, wait. Okay. 9th of June. What's today? Okay, what's today? Let's do our little test here. I like to do this test on every Sunday. Well, yeah, Sunday. Okay. According to this is basically going for the high and low of Saturday and doing a TR pocket. That's all it is. Or actually, I don't know, maybe I should do it like that, because this is Friday's high, one of Friday's high when it was retracing, and it gives us a little bit better reaction there to the 618. So when this happens, typically we test out the contrarian levels. So either we're gonna have a continuation right from here, or we might, as kind of like an SFP, react to this 1272. So let me just remove the 6 end line and put this to read on the right. Yeah. Also, if we change market structure, which apparently we did, then I guess this is high number 1 and this is high number 2 for that final damage M that I talked so much about. Okay. So now we basically look back and it's like 66.6 is a target. If it fails to go there, it'll be because we use this as a support. Okay, let me just put this again on the S&D 4 hour. This is one of the last things. Let's talk about them last. And this is going to be for talking about market structure. I'm sorry to sometimes mix subjects, but it's just to not forget about them later. Okay. And now, what do we have here? Okay, this is 15 minute, 15 minute. Where is that guy? It's one of those up there. Okay. Let's mark all of this as liquidity. Didn't include this guy. Okay, seems about right. So now we have that high to take. I'm gonna mark it like this, and we have the all-time high, and that one I'm gonna mark as all-time high. Okay, and I think that's it. Okay, in terms of liquidity, this part would be interesting to talk about for the video, but it was already taken. Like all of this looks like a very juicy liquidity curve. So it was taken all out, came back to liquidate people who probably longed too late, and now we created another liquidity curve. Like this curve like this is not good. It's not good in the sense of holding price. This is usually an easy target, right? So if we start going down, this is just like first TPs, you know, the easy TPs. I'm gonna delete this one. Every time you see liquidity curves like that, probably bad. Okay. If this fails, we will probably test this wick. If the wick doesn't hold, those equal lows become a target. Okay. So we talked about that. Yeah, I guess that's it. So let's go here to the weekly, just to check out our little list. Now it's the part where we basically have to use an indicator, because otherwise we wouldn't have. We wouldn't have to. So what I like to do is check out points of control, and well, naked points, which would be volume points of control, time price opportunities points of control, naked VWAPs, like previous day VWAPs that weren't tested, and single prints. And because we are on a cryptocurrency, we can also check exo charts for stacked imbalances. So this is the PVP, so we're just doing volume now. So this is a naked volume point of control. That's also a naked volume point of control. Let me see further back. if we left any behind. Not really? Not really. I find that hard to believe. Let me push the replay back. There isn't a naked point of control here. Okay, we have an... Wait. Right, okay. I was just checking if that guy is tested. Point of control ended here, point of control ended there. So let's come to this 52 area. Okay, so we only have... Oops, I didn't check the horizontal ray. We only have this one and those two stacked together. I don't try to be millimetrical about these. I tend to leave them 1 pixel above, just because again, it's a zone, right? Below 43k, I don't think it's worth to mark these guys out. We would have to do another analysis when we get there. That's it for the volume point of control. So I would come here and I would call this volume box or volume levels, kind of whatever you prefer. And now let's do the same thing for TPO. On BTC, I set this at 200, block size 30. Okay, and that is also why I'm on the 30-minute. I think these are a little bit more precise. So we have a single print to the downside, untested. It's those purple little lines, okay? We also have to the upside. Again, just marking out the purple little lines. This is a good low. Keep that in mind. This is not as good of a high. And oh, point of control of TPO there. We got more down. Oh, this guy is naked volume point of control and TPO point of control. It's basically the same. This gives it a little bit more power. I'm gonna put this on the single print over there and here, and I'm gonna copy this guy here. Just remove the volume point of control. Okay, now let's see before this. A lot of single prints. Oh, this is bad news if we come here. This is a poor TPO low. And did it end like that? Did that day end like that? Let me check. Oh, it did. So we have two poor TPO lows. One down there, one over there. I'm not gonna mark all of the single prints. If we start dropping here, we're just gonna drop hard. But I will mark out the point of control. Okay. And I mean, I don't think I need to mark out more than that. But let's change this to also TPOC. Another pour TPO low down here, and another one down there. Yeah, if we start dropping, man, it's gonna get ugly. And another point of control here, and another one there, and another one there. Oh, this is I remember this. Not gonna mark this out because it was tested on several other exchanges. Okay, that is basically it. So these guys, I like to separate them from the volume point of control, because in this case I'm including also single prints, and it's just a way for me to not worry about what is a single print, what is a point of control. It's everything that you can see with the TPO indicator. It's in this folder. Okay, just to simplify it a little bit. Did I mark that guy on top? I did. Okay. So this is now done, and now I have this indicator which was given to me by Surface 9 now. Hope that guy is okay. I never heard from him again. And it is on our premium section, the trading view part, trading view channel. Sorry. There's the link for this indicator. It's nice because it marks out all the naked view ups there are on the chart. So we have one here. Oops, did not want to do that. Okay. We have one there. Again, guys, it's not really important for you to nail the exact number of this level. We have so many. If we come down here, we have so many. I don't even know if they will be a reaction point or just a target. View ups were so not tested on that move up. And we have one here that was completely front run. Okay, these are all view ups. Okay, now let's go back to we can remove this. Let's go back to the weekly. Naked points of control, volume points of control, view ups, single print, stacked imbalances. Let's take a look at EXO just to find out stacked imbalances. Ooh, big cluster here. This big cluster starts at... I'm gonna have to zoom in vertically, no chance. So it starts at 70, 85. I always give it a little bit of room, guys. So... 70, 85, and it ends on 72.95, like the group, right? 72.95. So this is like a $300 space where something can happen. I like to mark out like the first one and the top one. And then we have more to the upside, but if we get there, we're gonna get into other things. I think that the stacked imbalances become irrelevant. One thing to notice is, look at the big group of stacked imbalances that appeared right on top of the candle. Right on top of the candle. This basically exhausted sellers, and now longs got trapped there. If they are not gone already, probably gone already. But it's important to note that starting 72.045 There's a big cluster there. I forgot already. 72. Where was I? $72. Oh, 65. Right on the damn top. Okay. Now let me reset this. What about further to the left side? Like, for example, aren't these girls afraid to die? Well, these girls are probably going to die. These stacked imbalances will not hold. And those stacked imbalances up top, they're a really nice target, guys. Really nice target. I'm thinking if I'm sorry, my head is already thinking a little bit ahead. Sorry about that, but I'm already thinking single prints here, stacked imbalances, lining up with this point of structure here, push price down as a fake move for Monday. It could even push us up right from here. It's actually very interesting. And not go further down. We'll see. Anyway, continuing. I'm sorry for that. Mind divergence. I would like to go to the 30-minute, but I think it's gonna take a while. Let's see. This might take a while. Okay, it's not that slow. Just for us to be able to see a little bit more of the chart, because we have a little bit of a mixed imbalances down here on these lows. Wouldn't surprise me to see price. We were talking about that. Where is it? Yeah, wouldn't surprise me seeing price taking out these lows, ranging, starting to push up would be nice. Anyway, okay, 30 minutes is here. So we're not going to care about that, that's done. Let's hide the TPO here just to check. Ooh, but this is another big group. This group is even bigger. This group of stacked imbalances here is even bigger than those ones. Although we also have a nice stack here. But I mean, nah man, this is almost for sure going to be like a liquidity grab move. Sell side liquidity, buy side liquidity. They are too stacked. These guys start at 68,185. Okay, Elena, see you later. Which was 68,185. 68,185. Okay. Already tested 1 hour fair value gap followed by a 1 hour order block. Let me just mark out this guy because otherwise I'll forget about it. Okay. Let me just okay. Actually, let me leave that there and I'll just group it up with the other one. These two are gonna be hidden. We'll talk about them later. Okay. So further to the left. We probably don't have anything. Isn't there I thought there was a button to maximize. Can I maximize just this window? Hide menus. No, not this. I thought there was a button to maximize this. Whatever. Okay, let's go further back. Oh man. There are so many. They are so many. I can't even read more than that. They are so many. I know that they are green. Green stacked and balances generally mean support, but I think that this is gonna generate a long squeeze. We have a bunch of shorts right on bottoms. Generally, if we're looking at the 1 minute, seeing places like that and price if starting a trend in that direction, when it gets there, it's gonna even push price even further. That's what typically happens. And I can perfectly imagine all the longs being squeezed down there. I don't even think it's relevant to mark out all of these. And it's not about the work, but it's just because whatever happens inside this internal range is probably going to determine if we actually do make a new like all-time high probably to 75k, or if we really start to go down. I think that overall starting to lose 66k, like losing this region is pretty bad. We're gonna just recover the whole liquidity zone, make a new low, probably go to 52k minimum. I mean, it gets to a point where it's just too bearish, right? So another reason why taking out those equal highs would be important. That's another reason. Okay, so I'm gonna leave this as is. Okay. Now, let's go back to our weekly checklist again. This is all done. Check, 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 right? So volume profile of ranges and of trends. For this, let's just check out the following. From the absolute low to the absolute high of this bullish move, we have a high volume node here, point of control. We have another one over there, second highest. Then we have another one here. And because it already did its job, I'm gonna also mark out this guy. Did its job twice with the help of his sidekick, this guy. Okay. Everything else, I think it's a little bit irrelevant. Maybe that, but that's not as clean as the others. My dog loves me. Come on. Come, man. Come. Get in. Hello. You want to show up on stream? How you doing? All good? Guys, you have any questions, you interrupt. No problem, okay? My dog interrupts me, no problem, as you can see.
So far, so good. So far, so good.
So this is the only relevant range in my opinion right now. We should as well, probably on the 4 hour. Yeah, not on the 1. The 4 hour is probably going to give us a better precision. Do not include, just include the range. Do not include the break in candle and the breakout candle. So not include this one and that one. So let's do from here to here. And this gives us this high volume node. Oh, sorry, let me just choose the template before copying. And the point of control. I wouldn't say that any other is relevant. I like to always put the volume nodes a little bit before, a little bit below. There's another one there, but probably not as relevant. Okay, meaning you can see where I'm going with this, right? If we go up, react there. If we come down, probably react to one of these guys. We really don't have anything else. Zero volume on this section in comparison, of course. Now if I drag it, of course that if I drag it to the current price section, we're gonna have the point of control exactly on that, yeah, because it's where it ranges more, right? But for that, let me just do a comparison here, because this is for the trend, and it's relevant because this will line up. This is the last thing that we would do, but this would line up with Fibonacci standard level for a retracement, right? For example, we have in between the 0.5 and 618 high volume nodes, in between 618 and 702 high volume node, with an order block over there on the 4 hour. So again, confluence. But in this case, the same way that I did the range here, we would do the range excluding the break-in candle. Oops, I wasn't drawing. And this is not yet a breakout candle, right? So we would have to do it like this. And again, high volume node here. Point of control is pretty clear where it is. Obviously, it's where it's doing a lot of action now. And if you notice, the point of control of this small range lines up with the high volume node of this one already. And the second highest point also lines up with that. So doing this basically nullifies the need to know this information up here, but confirms this information down here. Might as well mark out that one below this guy also. Okay, and that's it. Let me put this on the group of fibs down there. Okay, so now let me hide all of this and the fib, and let's do the full range since we enter this zone. Wow, point of control and a very important piece of information right there. Very important piece of information. So now that we have this guy, I'm not going to show up these fixed ranges, just to not confuse myself, but I'm going to show up the high volume nodes. And you're going to notice that the ones that we drew with the trend check basically line up with the bigger range here. So I don't even think that we need to do any modifications. Maybe push this up a little bit. This one is okay. This one is okay. This one is a little bit to the downside. This one is perfect. 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 And perfect. So yeah, basically these are our main points of interest in terms of volume. And usually I call this ranges and HVNs, or at least HVNs. And we are very close to where this will all like fall into place like a puzzle. We already have for our S&D. We already have the supply and demands. Let's do structure. So in terms of structure, this is what I was talking about. Did I delete those lines? Oh wait, I did 2 boxes, dumbass. What does this guy have? Okay, it's just that blue line. Okay. I wanted to hide it. Okay. Market structure. What's technically happening now, guys? We were in an uptrend. Once we got to this high, we made another higher low, but we weren't able to create a new high. So in between this section, whatever happens in between this section is internal liquidity. Okay, it's just noise. It's not the overall trend direction for the market, and that's why we want price basically to take liquidity from somewhere to give us a signal, a sign of where price might actually go to in this 4-hour market structure, because basically right now we're kind of trapped in this 4-hour market structure, this 4-hour consolidation. We need a sign to tell us to what direction are we going to break out of this consolidation, right? So what has happened recently? 15-minute uptrend starting from here, 15-minute uptrend that shifted bearish, closing below that point of control, point of structure over there, which is also relevant to this little guy. So I'm gonna mark it out as previous structural point, and also this one as previous structural point. And we have the 4-hour fair value gap basically lining up the 50% with that. I do have a theory based on the third candle close. This one closed inside the gap, so we might actually come for the block. Oh, that bug happened again. Okay. Don't we have, what did I mark there? Was a high volume node, right? That was on top. Yeah, the point of control. Yeah, these 2 high volume nodes might be like, if we are bearish first, this order block and the high volume nodes might be enough resistance for price to not be able to go higher. Hell, even this can be a reason not to go higher, but time will tell. I think that if Sunday / Monday only gets us to 7108, and we start dropping, Monday will probably be a fake move going to one of these points of interest, and then it's a little bit more of a bullish scenario, in the sense that it creates more reasons to not go down there, not break 66, and start resuming the uptrend. Alternatively, we do react to one of these points, but instead of reacting to this demand area, we start going way down below these guys, because they're kind of actually kind of stacked, right? This is a nice reaction though. A lot of lows here. This wick, this candle doesn't have a close, so it's a nice reaction. So yeah, we already broke this. This becomes technically a breaker block. So this might be resistance for the Asia session, we'll see. Let's see, weekly. That is it. Like, we just want to do local time frame, right? This is just to determine a direction. We will basically decide if we're going up or down based on our points of interest. It has to react to this and start reversing the trend, and so we will target this minimum. It has to, and now we can talk about fibs. It has to break this low, for example, as an SFP, react to this TR pocket, maybe like this, take out this low. Do we have a liquidity markups? Okay. Maybe react to this, and then start going up. Or, yeah, because we already reacted to the 618, correct? Let me see. Yes, we did. Oh, goddammit, I clicked 3 times, didn't work. So we already did react to this. Yeah, makes sense. Makes sense to go down. Now the question is, are we going to go down just for this? Or we're going to go down for the TR pocket and then start going up? Or are we, because we already came to the 0 line when we reacted to 618, let me zoom in so that you understand better. 618, when we get a nice reaction, possible targets as are the 0.5, if that doesn't hold the opposite deviation. Or it can just come for the 0 point, which is basically a previous structural point, right? And use it as support. Like this. It was kind of perfect. So if we actually start going up from here, I wouldn't say straight away, not like a crazy move, but eventually take the equal highs first to then drop hard and disrespect all of this. Much less likely, in my opinion. Time will tell. Okay, another thing that is relevant and interesting is one of the ways of drawing TR pockets is the end of a move to the correction, right? And to the correction gives us the TR pocket very close to the breaker, so it's another reason as to why we might just react to the breaker and come for this zone point of interest. And here, once again, we can have a much stronger reaction and go for the equal highs. Because let's not forget, equal highs over there. That is it for value gap daily. Oh, this is one of the support and resistance zones. This is one of the support and resistance zones. Daily levels do we have? We do. Daily level on that 4-hour order block. Daily level on that zone of interest. Weeklies, no. Monthlies, no. Okay. The yearly is way down there. So naked point of control 71,165. Keep in mind, we do have stacked imbalances on the breaker block. And we do have stacked imbalances down here. So there's a very high chance we just come here, come down, come up, and just violate all of this. Or if we don't violate, I'm trying to think where it would stop. Could be, yeah. Come here, create a reaction here again, and just continue pumping. This could be. Could be. And I had another one there. What fib was that, or why? Okay, much more macro. To come to this area. This area, in my opinion, a little bit less likely. A little bit less likely to hold, to cause a reversal from here. Time will tell, but it's less likely in my opinion. I like this point of control because it's basically where a lot of highs were before price pushed. So you can clearly see that there's like a local. There is a local support and resistance zone at this area, right? And that could be a nice support. Could be a nice support. Guys, I think that's it. Do you have any questions? Because I don't have time to do gold. This took way longer than I thought it would.
No, I have no questions really. It's a pretty good example. Would you say you do this? This is what you do.
This is what I do once, and then, for example, if I'm looking at the chart for the first time ever, especially if it's crypto, because on crypto I have exocharts information.
Yeah.
This will be the list. Obviously, it's really important to have it in folders, man, because otherwise you can't even see the fucking candles, right? It's so much information. Like if I turn all of this, and now I go to even the 15-minute chart, it's an overload. I won't even know what to look for. It's just too much. And I mean, on the 15 minutes, it's not too bad. If I zoom out a little bit to like the 4-hour, like, holy, no.
Yeah, it's readable.
Yeah, you just can't look at the chart. So
imagine that you start the live stream, right, guys? We're looking for a trade here.
Yeah, that would be amazing. That would be amazing. Just troll the internet. No, the idea is always like go step by step. Like, have we reached a daily level? Not yet. But have we reached liquidity? Also not yet. Like on the 4-hour, for example, we did take. I had this marked out. We did take liquidity here. So this is interesting, and this is an interesting reaction, right?
Yeah,
so,
use what's relevant.
From here, you think, okay, we might go to 71,362, right? Just based off of this. If we can't create an uptrend, we can still come for this daily level and then go for the upper one. If we go to the upper one and we take out those equal highs, but then we close a 4-hour candle below, then it's logical to think that, okay, this liquidity was taken already, so it's gone. So now what's next is those equal lows there. So you would know, okay, this is actually bearish. I'm gonna target 66,778 minimum, right? Or 66,639 because it's those equal lows. Then you hide this and you look at this, and it makes more sense again. Support and resistance here, support and resistance here, and then you would think, okay, these equal lows are a target, but for example this fair value gap weekly was already mitigated, so maybe we'll not stop on the equal lows, we'll just maybe stop on the support and resistance zone. And if this doesn't hold, then we're going for the next liquidity, and so on and so forth. Extremely dependable on whatever happens for us to get there. But then again, you hide those. You look at other confluences, and so we have that idea of getting to a daily level over there. And the daily level is basically a 4-hour order block with a TPO and a naked point of control and 2 high volume nodes, blah 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 blah.
Mhm.
So obviously we get to here, I'm thinking of shorting, unless market structure is telling me otherwise, and heavily otherwise. If we come to here, I also have things telling me that I should look for a long here. Other than that, everything else that happens in the market, anything else, is basically just noise, because it will go for one of these at one point in time. You just have to make sure that you are entering from the opposing ones. So if you're entering from liquidity on the top, you have to target liquidity on the bottom side, and so on and so forth. Everything else is just, well, it's just noise. If you catch a good trade on the top, you shouldn't just close because you're in a nice profit. You should close whenever the opposing liquidity gets taken, because it will go for the opposing liquidity, right? It's what moves it. Of course, we are seeing the chart as it is now. We don't know what will happen when it gets to one of these guys, because if it gets to one of these guys creating, for example, something like this, and creates, sorry, that last line was too big. If we create like a curve here, of course that when we get here, we might not even go for this equalize because we already created another curve here. So it really depends on what gets created in between, of course. But looking at it right now, point of interest is here, liquidity grab possibility over there. Which one happens first? We'll go first. 444. Where is it? For these equal lows. Very, very likely. Very, very likely. So nothing is ever guaranteed, as usual. But it's how we deduct things, basically. And it's a numbers game, right? It's a numbers game, basically.
Yeah. So when you say in between noise, are you not looking for a trade there at all? Or is it just kind of more short-term trade? Like you're
For
okay
example,
holding...
For example, lately I've been really appreciating the value of timing. For example, if I see, let's imagine that at 6 a.m. my time, which is going to be, oh, I can't mark it because I'm on the 4-hour, wait. If at 6 a.m., god damn it, if at 6 a.m. Price, for example, comes here first, it's dropping now, so let's imagine that it comes here first, starts going up through all of Asia. At 6 a.m. it comes here and starts giving me reversal signs. I'm gonna target that daily level. So
Yeah.
it's short term, but it's about timing, because between 6 and 8 a.m. there's generally a reversal or a considerable move starting. So if it's not giving me signs that the considerable move is to the upside, if it gives me an idea for a reversal, then I'm gonna target the next liquidity, basically. It is a much more short-term based logic, yes, but it's still targeting opposing liquidity, always opposing levels, right? Macro plan, like that 6 a.m. idea that I'm just sharing is noise, but it is noise on like the daily time frame, right?
Yeah.
Of course, even something that you see on the 1 minute, on the 5 seconds, there's going to be a lot of noise, and the 1 minute is the quote-unquote macro time frame, right? So, but the thing is, if on the 5 second you get to a 1 minute level that you're watching out for, and you see signs of a reversal and not a continuation, then you have to target something on the 1 minute that is opposing, and that on the 5 second would make sense to go there. So, you know, price is always fractal. What I say is noise in one time frame, it's obviously not noise in a lower time frame than that, right?
Yeah.
There's always a trend going on. You just have to look for it in a time frame. For example, right now on the daily, this is nothing. It's just a candle. Actually, it's just Fibonacci's. We can see the candles. But when I mean like daily, 4 hour, this is nothing, right? Means absolutely nothing. If I go to the 1 minute, like, oh my god, we have been pumping so hard, right? And now we are obviously shifting structure. Asia is about to start soon. We would have to take a look at, for example, if it comes down here, takes out these lows, what happens after that, so on and so forth. But dropping like it is, again, we could do volume profiles, and this looks like a big easy liquidity curve. But if it stops dumping, a higher chance of dumping, stopping the dump is either this higher volume node or taking out this low over here, and then creating a reaction. I'm saying this low just because it's the last one of these series of ascending lows. That's the only reason I'm pointing out to that low. So, for example, right now, I would look for a trade after the Asia kill zone ends, which, for example, right now is way too late. I should already be in bed. But for example, on my time is 10:39 p.m. In 2 hours. No, sorry. Yes, in 2 hours, Tokyo opens, then another hour and Hong Kong opens. Between those 2 hours, the opening of the two sessions, Asian sessions, there's usually a liquidity grab, and so targeting something there would be interesting. Let them do the liquidity grab. Typically, you're gonna start a move after that. That move is probably going to take you to one of these levels, either the lower TR pocket levels, or the daily level, or the above TR pocket levels / that previous structural point. So it's always, you have to always be mindful of the time frame that you're in and what things have not been tested yet. So, who's gonna stay awake for Asia? Are any of you guys gonna stay awake? Ali, maybe?
Me.
You? Okay. Then my advice would be wait for Tokyo and Hong Kong to end. They're gonna liquidate some people, either to the upside or to the downside. When you start seeing a trend, follow it. Don't fight the trend. Just follow it. And I will be here for 6 a.m. 6 a.m., 6:30, in between that. Okay. And yeah, guys, I really gotta go to bed. It's already super late for me.
No problem, bro.
So I'll catch you guys later.
Good explanation.
Yeah, I'll catch you guys later. Get some rest. Alexa, don't go to bed too late, bro.
Yeah, I'm gonna try. If on the beginning I don't catch anything, I will sleep.
Yeah. You
Thank
don't
you.
have,
nice
do you
one.
have class tomorrow? No, right?
No, no, no. I finished school.
Okay, because try to, even if you catch a move, try to sleep so that you are.
Yeah, I'll trade you see how you made your schedule? Because my schedule is like similar to yours, like in a sense.
What I was going
When
to
you
say
have
is
something,
to.
I have something else.
What I was
But free time is trading time.
what I was
So
going
my
to
free
say
time
is
is trading time.
what I was going to say is try to get 7 hours of sleep minimum, because you're obviously sleep deprived, bro.
Yeah, man.
You
So
gotta
you
get
can't
that
imagine.
minimum 7 hours, bro. Or otherwise you're not gonna recover from that.
Yeah, man.
Okay.
Yeah, man. I'll try.
Okay, guys. I'll see you later. Sleep well. Get some rest.
Night, bro. You too.
Bye, bye, man.
Bye bye.